Pro Academy. I want to remind you that in today's presentation, everything you see is for educational purposes, does not constitute investment advice and or recommendations. All right, I want to take you through a walkthrough of what's happened so far in the market. Let's start out with our equity market here. Let me just open up the chart and bring it over. And here we go. All right, SP 500 has managed to hold some of this upside. And I know that a few days ago when I started talking about the markets and this massive rally, I know some people were mad that I was bullish because they feel like I have to be short here because it's gone up so much. And I can't be mad at that, and neither can you, all right? And I think our next level we're targeting here is 2180s. I think we'll get there eventually. We're accumulating a lot of buy stops above. A lot of traders are trying to whack this thing and hammer it lower, but it's just resilient as ever, and it's holding above these 2160s. So 2160 is our long-term support to the upside. 2180 is our target. That leaves us a 20-point range that we could work within. Above there, I think we get 2190 and 2200 will be on deck. Oil prices rebounded. We talked about this yesterday. My price for them was 41.77 was the low-end price that I was looking for. I didn't get there, but I knew below 43s that would eventually be support. All right, but look how frustrating it is. It triggered just enough people short on oil below 43 to get some kind of rebound happening. All those people that came in on that wick were far too late. I don't know who in the world wants to short oil at 43 after it's come down nearly $10 a barrel. All right, so that's why the bounce came up. That's why it's dramatic. It's up over 4%. I've been waiting for this for ages. I said it would happen, and it's happening. I'm not a miracle worker here. I'm just playing the percentages and the odds. And at this point, I think we've now cycled out enough short sellers of oil that if we touch around 46, that'll make a really good short zone for you to try to float a short to the downside. Saudi Arabia, though, just announced today, and you have to be aware of this, that they're going to have meetings again this Friday. There's a meeting in November for OPEC producers. So they're going to jawbone. They're going to try to strong arm and muscle this market higher. But here's the fact. It's a weak market. Okay, let's go to CL, and I'm going to look at the futures here on a technical chart on a daily, and then I'm going to zoom in and give you some intraday levels as well on oil that you could trade and that are going to be actionable. So on the oil front here, here's why we started to say, hey, this bearishness might not be too around for too much longer because it bottomed out, all right? It bottomed out for 43 on these lows, which came in from September 16th and September 1st. These are September lows. Price rallied, momentum was a little bit oversold, and we hit this 200-day moving average on oil. And when you get a sell-off to the 200, it's at least good for a bounce. But now we've kind of bounced almost too quickly up to these 46s. So when we get up to 46, I'm looking to sell them. You had some cues or indicators here. Price walked down these Bollinger Bands, rallied, never even got to that lower band. So started to peel off it, like I say, and started heading higher. So 46, watch for that level. The other one I kind of have my eye on is 47. So in here anywhere, that's my short zone. I'll be comfortable adding to my short. I tried it short today. I caught 30 cents on the retrace, and I got out of that trade ASAP. All right, here's some levels. If you're trading crude, let me go crude template. If you're day trading it, well, this is a 30-minute time frame. You can see on the bar chart, it's nothing but upside. I do think we've gotten a little bit ahead of ourselves here on oil. I think that about 45, if you want a real actionable selling level, I'll give you one in a second here. And this is what I'm looking to sell in the afternoon. Somewhere around 45.70s could be a good shot. But remember, crude oil closes at 2:30 p.m. Eastern. So might not be an amazing idea. And in terms of volume, delta, where's the level I was looking for? I was looking for a 10 PNF here. Sorry, the 50 PNF. All right, so you could see massive rally off these 42s, huge. And there's a lot of volume coming in here towards these highs. So I think on oil, 45, 40, anywhere from now, you could float a short here if you wanted to, really and truly. It'd be a really tight stop. I'd say if you're shorting 40s, maybe 55s maximum. It's $150 risk per contract. Your downside would be these 92s. So I'm looking to get short oil again very soon. When and what I'm actually going to trade, that's for subscribers. Here's the S&P 500. Our bullish target for the week remains 2170 in through here. And we haven't really gotten there. I think we got some more upside coming. It's about, sorry, this should be 2190. I don't know why I keep saying 2170. 2190, let me fix it. I hate being wrong. Well, not in trading. Not in this kind of stuff. You shouldn't be wrong in writing levels. Bullish target 2190 to the upside, bearish 2150. We haven't hit either. And if we sit tight in this range, that's fine as well. The bottom line here is we bounce off this 200 after elections and we're holding these highs. If you're looking to buy puts on the market because they're cheap, understand you're doing it for the wrong reason. You're not trading in the market based on the concepts that you use to go Boxing Day shopping. You're not looking for cheap prices. You're looking for value. All right, you're looking to drive value off the lot. And that's the key concept here. And right now, the value is to the upside. All right, it's increasingly more likely that we get another 10 points to the upside than you trying to call for this massive sell-off and waste all this money buying puts doing it. And right now, I'm still bullish. I will say there's some consolidation forming here. 2160 is the level that the bulls have to hold on the S&P. All right, let's look at gold. And I got some specific trades as well for gold for some of our subscribers. We'll talk about that in a second. Here's the price of gold on a daily chart. We ripped from about 1048 in 2015 of December. So in about 2 years' time, we hit some of these 1360 highs, got sold off on a daily, rallied on this Trump election on safety assets, so risk-off trade. We hit about 1340, just came shy of it, and then whack, it came lower and dropped like a stone. And you know, we talked about this. We bought gold here. We were the traders that bought gold here, and we got rid of it at 1300. And I think what's setting up here is the same kind of thing that started to set up here. But be patient, because I see one more tick lower on this chart. Now, I'm thinking about 1210 will make a good purchasing opportunity. Is the 50% Fibonacci retracement. It's the lows here from March 28th of 2016 and May of 2016. And we're into gold seasonality strength. I think there's some upside for gold. It is below 200-day moving average. We are now kind of seeing capitulation of price dropping as volume increases. So this capitulation here usually ends with a rally, and it looked very similar just a couple weeks ago. Well, actually in early October. All right, so I'm starting to see reason to get long gold. When I'm going to do it, I'll let subscribers know, obviously. We're going to do the trade together, so you'll know as soon as I know. Looking at currencies, I wanted to show you guys this, the currency strength chart. I know a lot of you out there on YouTube are currency traders, and there's the currencies I'm looking for. All right, you could see the euro, the pink line, continued strength in every currency against the Japanese yen. So the Japanese yen's getting driven lower here while every other currency is just strong. Okay, and it's interesting, which means it's ranging and there's not as much movement towards highs, but the US dollar just absolutely continues to rip. So the trade idea here is you got two options. If you want to trade this thing, wait for a dip in these currencies. This is a 4-hour chart. Wait for a dip in the majors. So wait for the euro to come down, the US, and then buy it while selling the yen when it rallies. But right now, that's trend one, is to enter into the trade. Trade two, and the one I'm leaning towards more right now, is to fade these things. Is to sell the US to buy the yen, and to trade the reversion to the mean trade over trying to get it to go a little bit more. All right, that's what I'm looking for from a currency strength perspective. So everything's strong, led by, in fact, the strongest currency right now is the Canadian dollar. All right, and after that is the Australian dollar. And then after that, it is the euro, then the US. Okay, so US actually slipping. See the purple line? It's coming off. So what you could do is sell these currencies, sell the euro, sell the Australian dollar, sell the Canadian, buy the yen. That would be my currency trade for the week, really, not just for today. What other questions you guys have before we move on to some other stuff? One thing we've been chomping at the bit for is market breadth. So I want to warn you guys about this, and ladies and everyone else here in the room. Do you have any questions? I don't know if I turned it on for YouTube, by the way, for the question answers. Oh, there's a fiance doing something on Facebook. The breadth is following the market. Look, as the market's rallying, the number of stocks above the 50-day moving average on the SP 500 are rallying with it. So you're getting a participation of stocks on board this rally, and that's the only reason I'm bullish. When markets were going up here before the election and breadth was weak, I was saying this market's got bad breadth. And if your date had bad breadth, not breath, but breadth, if your date had bad breadth, you probably run away from them. And I was running away from the longest time, but now it's coming up. Starting to get bullish as breadth increases. I'm looking to get some long. So breadth is strong. Okay, gold, I think we're going to pop. S&P 500, we might find new highs. US dollar is overly strong. I think we come off a little bit here. And volatility has once again just collapsed on the VIX. Look at this thing on the daily. Okay, back down to 13. So if you're an option trader, this could be a good time to do debit spreads and an all right time to do credit spreads if you're doing the right ones. So if you want to know which ones to do, sign up, join as a subscriber for Earn Package. You get midday updates live, which is this plus a little bit more, actually a lot more trade details. I'm going to show the live account in just a second to subscribers. You get Sunday webinars, you get access to our courses, education, support, you get a ton of stuff. And I think everyone's happy with what they get so far. And we got a futures course coming soon too. So you guys have a wonderful afternoon on YouTube for the trading room and our subscribers here at Earn Package and Learn. Just give me 1 second. Let me just shut down this webinar and we'll carry forward with a few trades that I have for today. I've actually put a few on already. So just 1 second. All right, you do have a wonderful day. Enjoy the rest of your session. Trade safe out there, manage your risk. Don't fight this thing. You can fade it, but don't try to hold on to a bias if it's clearly not working. Right now, we're going to the upside, and I think we got some more upside left in us. Also careful because the markets are slowing down for this week. It's getting a little bit more boring after this massive surge of volatility last week. All the best and have a great afternoon. We'll talk to you guys soon, and we'll do another one of these tomorrow at 12 p.m. Eastern. Take care, traders. Have a great day.